Stephen, in terms of these markets, we picked up on it before the break. You said, look, you're fed up with people talking about a Trump trade, but I'm paraphrasing. But you said that the ignition for renewed enthusiasm was already there. So the foundation today will be his first jobs report. What's important for you today in the data sweep?
Basically, I think the most important releases this week have been the PMIs in Europe. So being parochial, because I'm a European strategist, but they indicated that things are still, improving. Real growth is on track to be satisfactory. It's not going to shoot the lights out this year, but it'll be satisfactory. And everything we're seeing in bond markets and five-year forward inflation swaps suggests that inflation is picking up as well. That leads to nominal growth. That's good for companies. So I think that's the most important thing by way of background for us.
Mark, when you look at what's happening in the United States at the moment, the arrival of a new president, clearly there's lots of politics that's been upsetting parts of Silicon Valley, isn't there? There's been a lot of fallouts between the two. Just looking at his plans as we know them so far, though, Donald Trump's plans, what is it that he is doing that is going to have most impact on the universe that you look at? Is it around immigration or is it other policies?
I think the most headline-grabbing policy is around immigration. In terms of these companies being able to get the talent that they require, a lot of the programmers and software engineers. But I think, funnily enough, we're not going to see as much of an issue as perhaps the market at first thought. It's all about deregulation with Trump, but in the case of technology, people have been talking more about regulation. And some of the big tech names in the fourth quarter of last year, Amazon, Facebook, for example, were both down 10% after Trump was elected. And I think that's a big overreaction. So I think the regulation will be quite light touch, and actually things will be fine.
But certainly from a CEO level, though, the stage is set for, and I'm being generous here, a moderate level of confrontation is how it would sound at this juncture. They're not bedfellows, are they, at the moment?
No, but there don't seem to be many bedfellows at all where Trump's concerned. I mean, confrontation is his style. And I think it will be, an evolutionary process. He'll manage the relationship with Silicon Valley. It's an incredibly valuable part of the economy for the United States, so he's not going to want to upset that.
Stephen, coming back to you on the European side of things, or measuring up the Europe versus the United States, where are you focused then in Europe at the moment in terms of your equity strategy? You say that Europe's undervalued compared to the United States. Where is that screaming out the loudest?
Well, I mean, Europe is trading at a big price to book discount to the United States, partly because European profitability has been very unsatisfactory for 7 years, and there's been kind of rolling earnings recession. It went through most of the market in the immediate aftermath of the crisis, and then financials were under pressure, and then you had commodities and energy. And at the moment, we're seeing a relatively sustained recovery across the world. So you're seeing a pickup in growth in emerging markets, pickup in growth in Europe. US is still growing reasonably well, and that's a very good background for profitability. So we think profitability can recover from here, and therefore we're trying to play that through areas of the market with more exposure to economic growth. So classically cyclicals and
that's what we've got here for you.
defensive.
We've got the cyclicals outperforming significantly relative to the defensive. Defensive's down 8%. The cyclicals really on a turn higher. Does that perpetuate in your view, or is that already pricing in the PMIs that you've just chatted about?
Well, my sense is that it can continue, because I think people are wary of a full storm here. So if we just think about where you've taken that chart from, it looks to me like that coincides with the turn in interest rates. Yes. So that's really the point at which cyclicals and financials started to move. If a turn up in interest rates signals sustainable real growth and a sustainable pickup in inflation, then I think that the trade has further to run. But people will wait for evidence that cyclicals are actually delivering the earnings growth that they're expected to deliver.